Hey everyone, it's Hunter Satterfield, a partner here at CWA and a member of our investment committee. And as always, I am joined by one of my fellow partners, Brian Bortz, who's the head of our investment committee, as well as Brad Sanders with Tectonic Advisors. And this is your June market update. For the month of June, domestic stocks were up right around 2.4%, international stocks at 0.8%. Domestic bonds at 0.8%, and then international bonds were down 0.8%. There was something with 0.8s this month, which is really interesting. Guys, I want to come over to each of you with some questions. It's a very interesting month as we look at those numbers on the screen. Brad, let's start with you. So, I think the last time that we talked, and really we've talked about this throughout the early part of the year, we've talked quite a bit about inflation and sort of the concerns that people have, investors have with what's coming with inflationary numbers. And so do you want to kind of give our viewers an update on where things are and things that Tectonic Advisors specifically is looking at?
Yeah, it's been pretty interesting. Coming into the summer, I think of the last few videos I've been talking about inflation almost specifically because it was a big worry. And you had all these, we've talked about lumber prices and how a lot of this stuff to us looked transitory. And it's kind of proving that out right now. Since the calendar rolled over to July, we're completing our fourth trading day now, and the yield on the 10-year Treasury has gone from about 1.45 to it almost broke 1.3% today. I know that doesn't sound like a lot, but you'll just have to trust me. That's a pretty big move in the Treasury yield in just a couple days. And there was something psychological around that 1.5 to 1.45, 1.4, 1.5. And it seemed like once the Treasury dove below that, the 10-year yield, it's the whole Treasury market is beginning to sell off. And we had the Fed come out with its minutes today, and it looks like they're talking about, tapering their asset buying programs earlier than expected. And those are all things that just don't really jive with an inflation narrative. On top of that, we saw some economic data this week that was a little bit weaker than expected. So I think, kind of our view that a lot of this inflation noise was just noise is kind of proving itself out right now. And that's going to cause the market to probably reshuffle the deck a little bit. We saw growth outperform value in the month of June for the first time this year. But, it's done it a little bit before, but to a wide degree. And that's probably, that inflation noise cooling off and growth stocks kind of catching up with the broader markets because of that. So we think we're going to have a little bit of a tug of war between, is there really inflation? Is there not going forward? Might cause a little choppiness in the market. But I think the overall, fear everybody had should should really start to dissipate now that we see yields coming back in line and the mark, that whole narrative starting to cool down.
Yeah, so that's helpful information. And Brian, to come over to you, Brad talks a little bit about that tug of war and that choppiness, and we've really seen that choppiness honestly throughout the first half of the year here as we sort of meet that spot of the half year mark. And we've talked on these videos about sort of that volatility that we've seen, yet we're still seeing, overall market returns, be very healthy this year. So, how do you, how are you framing that? How are you discussing that with clients as they look at sort of their long-term investment plan?
Yeah, thanks, Hunter. The short answer is that a lot of our clients are calling and the concern is, okay, I hear about this inflation risk. I hear about, risk in the market. The market's done really well. What should we do now? And, we focus on the long-term financial goals of our clients, and we really try to help them to understand what their risk tolerance is. By doing that up front, it helps to avoid our clients making an emotional decision at the wrong time. There's an old cliche in the markets. It's called sell in May and go away. And what that means basically is there's not a lot of trading activity that happens in the summer. Some of the summer months are historically lower. So if you just sold in May and then didn't worry about it till the fall, maybe you'd be better off. Well, we don't do things like that. Had we done that this year, sold on the first trading day of May, through today, we would have missed out on over 3.5% of an increase in the equity markets. And 3.5% for most of our clients is about half of their annual financial planning goal. So, we just don't operate that way. We really try to help our clients understand what their risk tolerance is up front. We plan for events like inflation or like uncertainty up front so that if they occur, our clients don't have to make rash decisions.
Super helpful, especially to just kind of continue to understand the things that we talk about on here, which is just maintaining, a routine in your investment plan and good decision making and continuing to invest, throughout that plan and aiming for that sort of goals-based investing strategy that we talk about. So great information as always, guys. Appreciate everything. So thank you. I hope you're all having a great and safe summer. And we will be back in front of you at the end of July. Thank you so much.